The American Rescue Plan met the moment, and it has put us in a place where we can actually put us in a place where the American people feel can actually, we can take on inflation. What I mean by that is we've seen growth, right, with, as I mentioned, more than 8 million jobs, and now we're transitioning into a steady, stable growth.
The White House's new way of softening that inflationary blow, you just heard it, is by rebranding it as our transitioning to stable growth. Okay, 8.6% inflation. But according to the chief investment strategist at Charles Schwab, the measure of consumer stress, which is the average of utility costs, gas, food, electricity, that surged by 25.7% year over year. So that puts the marker just slightly less than the peak it was in 1980. But our next guest fears we're in store for even worse in the days and weeks to come. Joining us now is Peter Schiff, chief economist and global strategist for Euro-Pacific Capital and host of Schiff Radio. Peter, thanks so much for being here. I was watching your tweets and Tom Elliott over the weekend discussing why the inflation number is so misleading. Explain it to us in simple terms.
Well, first of all, the government is reporting on prices. Inflation is the expansion of the money supply. That's the actual definition, and it often results in prices going up. But the way the government measures prices today, it really understates the true impact. If we were still measuring prices using the CPI that we were using back in the 1970s, the actual increase would be about double what the government is reporting. So not 8.6, it'd be closer to 17%, maybe a little bit more.
Well, Peter, when you think about the average cost of housing for individuals who rent, that figure alone was a staggering series of increases over the last, several months, in the last, really several years. How significant is that, given the modest increases in salary for individuals who are working?
Well, it's very significant. And, shelter is about a third of the official CPI, but the government doesn't use actual home prices, which are up about 20%, or actual rents that were up over 15%. They use something that they made up called owner's equivalent rent. And that's something that nobody actually pays, but that was only up 5.5%.
And Peter, we also hear now that to address the oil price issue, the energy price issue, the Senate Finance Committee Chair Ron Wyden is introducing what you and I remember as the windfall profits tax, called something else. It's a 21% surtax on oil company profits that they consider, I'm laughing because it's so painful, that they consider excessive. What's that going to do? They cause the price of oil to go up.
Well, look, if we confiscated all the profits and distributed it to the American public, you would barely even notice the difference. But if you take the profits out of drilling for oil, guess what? No one's going to drill for oil. So we're going to have an even bigger supply problem than we have right now. But the real problem is demand. You just mentioned that American Rescue Plan. That was a disaster. We need to be rescued from that plan, because what the government did was the complete opposite of what they should have done. As they were ordering everybody to stop working and we shut down the economy and we stopped producing, we printed more money. So we gave out all this money to people. We paid a lot of people more money not to work than when they actually had a job and they earned money, except when they were staying at home, they weren't being productive. And so we flooded the economy with money as we were starving it of goods. And of course, prices went through the roof. I predicted that this was going to happen back in March of 2020 when we first went down this road. But then Biden really kicked it into a whole new gear. And now we're dealing with the consequences of that policy, that reckless monetary and fiscal policy.
Now, with 0.75 increase in the interest rate, that's not going to do much, is it, Peter?
No, I mean, if the Fed is so far behind the curve, it can't even see it. We actually have to get interest rates above the rate of inflation. We need positive real interest rates. But thanks to the Federal Reserve, everybody has so much debt that we can't afford to pay an interest rate high enough to fight inflation. But it is going to be high enough to cause a massive recession and another financial crisis that's worse than the one we had in 2008.
Well, that doesn't keep people up at night, Peter. I don't know what will. It's great to see you, Peter. Thank you so much.